Hello friends, in this video we are going to look into what is ELSS mutual funds, the benefits that we are going to get out of investing in this mutual fund. In addition to that, we will look into how to choose the best ELSS mutual fund. Let's start our video. First of all, let's see what does ELSS mean. It means equity linked savings scheme. In short, we can describe ELSS fund as long term growth plan with tax savings option in it. Let's start our video with knowing what is ELSS. As we saw earlier, it is called Equity Linked Savings Scheme. As the name suggests, it is an equity oriented scheme. It means at least 80% of the total corpus is invested in equity and equity related instruments. In addition to that, it has exposure to fixed income securities as well. In simple words, we can say most of its fund is allocated to buy stocks in the stock market. Only 10 or 20% of the corpus is invested into the fixed income securities. In addition to being an equity oriented scheme, this is the only mutual fund which offers tax savings option. We can invest up to 1.5 lakh rupees per annum and can save the tax up to 46,800 rupees. This is one of the best ATC investment that we can go for. The return that we are going to get out of investing in this fund is going to be taxable under long-term capital gain tax. It will be charged for 10% if the total income comes above 1 lakh. It provides an exposure to invest in diversified manner. For example, the fund which are allocated for this scheme is going to be invested in different sectors with different themes. Means the fund is going to be allocated in different categories of stocks. In this section, we are going to look into the benefits of investing in ELSS fund one by one. Starting with, this is the fund which is going to help us to create wealth in long term. We have to consider this fund in case our investment horizon is more than 5 years. If you invest for long period, the return that you are going to get out of any mutual fund is going to be more. In ELSS fund, since it is going to be invested mostly in the stocks, the return is going to be really more. And it is going to be allowing you to invest in systematic investment manner. In addition to lump sum, whenever you have more money, you can invest as lump sum into the ELSS fund since it is an open-ended fund. If you are planning to invest with small amount, you can start with minimum 500 rupees to invest in ELSS fund. As we discussed earlier, this is one of the best tax saving investment option that you can consider. You can save tax up to 1.5 lakh per annum. The thing that we need to consider is if this fund has a lock-in period of 3 years. If you buy this fund today, you will be able to take out the return after 3 years. This is kind of lock-in period, but in turn it is going to help you to keep invested for at least 3 years. Since we are going to invest for 3 years, the return is going to be more. As we discussed earlier, the return that you are going to be getting will be taxed up to 10% if the return goes more than 1 lakh. Normally, whatever fund that we are going to invest, that may have entry load and exit load, but this is one of the fund which doesn't have both entry and exit load. In this section, let's look into the factors that we need to consider to choose the best ELSS fund. The first point is regarding the historic performance. We have to keep track of what it has returned over last decade or 5 years or 3 years. We have to compare the returns of this fund with its peers to see whether it has returned more compared with the competitive funds. We need to see the fund manager who is managing this fund, his experience, his expertise. We have to look into his resume to know more. We have to see how much amount of fund is being managed under this category. In addition to that, the main factor that we need to consider investing in any of the fund is going to be the expense ratio. If the expense ratio is going to be less, the return that we are going to get out of this fund is going to be more. We always need to select the fund which has less expense ratio. Let's look into the factors that we need to consider before choosing any mutual fund. Let's consider this as an example that we are going to invest in ELSS fund. So the main thing that we normally consider is the fund category. In this case, it's going to be the ELSS fund. After that, we have to look into the fund name, the AMC's name, which offers this particular ELSS fund. We have to look into the annual return provided by these funds. In addition to these annual returns, we have to consider the consistency. It means how it has performed when the market goes down and goes up. We have to make a note that we cannot select a fund just by seeing the annual return. Annual return indicates how much it has given over the past period of time. It doesn't mean that the same return we will get for the future as well. In addition to annual return and consistency, I will look into the research rating, means the rating given by some third party application. In this case, I am just looking into the value research rating given for each fund name. We can select the time period in which we can see the return it has yielded. We can start with 6 months and we can go for 1 year, 3 year and 5 years performance to choose the best fund that we need to invest in. These are some of the main factors that we need to consider before we choose any mutual fund. As we discussed earlier, the main point that we always need to consider is going to be the expense ratio. If the expense ratio is less for the fund that you are going to choose, the return is obviously is going to be higher because you do not need to pay more money in the name of expense ratio when you redeem your fund. Let's see some of the top performing ELSS fund over the past period of time. Let's quickly see what we have learned so far in this video about the ELSS mutual fund. This fund is going to be open-ended equity fund. It means most of the fund is allocated to buy stocks. It is one of the best tax saving option available. We can claim up to 1.5 lakh rupees per annum under 80C. There is no entry and exit load to invest in this ELSS fund. The point that we need to consider is going to be the lock-in period. This fund has a lock-in period of 3 years. If you invest today, you will be able to take out the money after 3 years. Since this fund is going to be open-ended fund, it means we can invest anytime. It provides an option to invest both SIP and lump sum method. Now we have come to the end of the video. Please do subscribe to our channel. I will see you guys in another video.